Welcome back to Road to Fire. We're a family of four documenting our journey to FIRE, financial independence, retire early. Let's chat about how I got an 800 plus credit score. I will share details on what impacts your FICO score, my current score and utilization, and 3 steps I took to increase my score fast with all the numbers like always, so please hang with me. Today, I only have 3 credit cards. I've had more in the past. I used to have several store credit cards, and over time as I paid off debt, I've gotten rid of them. Today, my 3 credit cards have a total credit limit of over $42,000. I got my first credit card right out of high school at one of those welcome to college orientation days where sign-up came with a stress ball and candy. I never had an issue with paying off my credit. I was raised by immigrant parents who paid for almost everything in cash and only bought things they can afford. Today, I don't even know for sure if my parents even have a credit card. My dad is a debit card kind of a guy, and my mom, who knows? I only got my first credit card because I had no credit and needed to build credit to get a car for college. I didn't know what credit was, but I knew I needed it to purchase larger assets. I did get wrapped into the do you want to save 15% on your purchase today by opening this account with X, Y, and Z retailer all the time. Retail therapy was my vice. Even though I had multiple store cards, I still paid the minimums and a bit more each month, never fully paying, but enough to stay above water. It wasn't until I left grad school did I start to clean up my credit across all of my accounts. I went one by one cutting credit cards and closing accounts and finally got my credit in a good place. I am now left with 3 credit cards tied to my banks and I only use one. In my wallet, I carry my credit card, license, health insurance card, and a note my son wrote me in kindergarten that keeps me motivated. The fewer cards I have on hand, the less spending I do. The rest of my cards are placed into a Ziploc bag stored in my closet. This has helped me curb my spending and keep my credit score around 740 for years. But when we started looking into buying a house, I knew I wanted to get my score a little bit higher. But first, what is a credit score? According to Fidelity, a credit score is a 3-digit number that provides lenders, banks, and other creditors with an at-a-glance understanding of how likely you are to repay what you borrow. Essentially, it's a standardized score to measure your ability to manage money that is lent to you. I don't know why, but this score for some reason reminds me of that Black Mirror episode where everyone was rated and walked around rating others, and your rating in the episode impacted your entire life trajectory. Well, your credit score is kind of the same. Your score will impact your financial trajectory, especially when it comes to borrowing for the purpose of larger assets. A 20 to 30 point increase in your credit score can save you thousands when it comes to buying a car or even buying a home. I saw this firsthand when I bought my first car back in 2016. At the time, my credit score was just shy of 740 or in that good segment. And I got a good rate, under 5%, but now I know it could have been much lower with a higher score. I've talked about this before, but your credit score should be a part of the core financial numbers you know. My goal was to go from very good or in that good segment to excellent to get even more savings long term. But this was a game changer. The fastest way to get a higher credit score is to know how your credit score is calculated. This was definitely an eye-opener for me. 5 segments impact your FICO score. I wish someone would have told me this right out of school before I even got my first credit card. I knew the importance of paying my bill on time, but I didn't know about the other segments that are even more important to creditors. So here are the 5 things that impact your credit score or the overall FICO score breakdown in order of importance. Okay, so number 1 is obvious, payment history, which represents 35% of your score. This looks at how consistently you paid your bills and if you paid your bills on time. Okay, next is credit utilization at 30%, which looks at the amount owed. FICO considers factors such as how much money you owe across all accounts, how much money you owe on different types of accounts, and the difference between your owed balance against your total credit limit. Up next is credit history. 15% of your score is attributed to credit history, because a long history of maintaining credit cards or credit accounts can help improve your score. This is the only reason I'm still banking with Wells Fargo, as that is where I got my first credit card almost 17 years ago. Now, this section I was not really aware of, but it represents 10% of your score and it's based on your credit mix. This data point looks at the types of credit accounts you have. It's considered financially healthy to successfully manage multiple account types, such as credit cards, store credit cards, mortgages, and student loans. But just to be clear, this is not an excuse to open up many new different credit accounts. Find what works best for you in your financial journey. And last but not least, the 10% is allocated to new credit or opening several new accounts at the same time. This could hint to lenders that you may be at risk for default or you'll stop paying on other credit cards. This I was aware of. I've always asked the lender, is this a soft or hard pull? I knew how this impacted my score. However, because I'm an 80-20 kind of a person, I focused heavily on payment history and credit utilization to increase my credit score fast. Okay, so here is my current credit score with Capital One under CreditWise. I get this information on almost a bi-weekly basis in the app. I don't usually pull a full credit report, but I probably should moving forward. Today, my score is 819, and it's finally in the excellent range. But here are the details that impacted my FICO score. Okay, so in the last 2 years, I've had no recent inquiries or have not opened any new accounts. Right now, I have an available credit of about $40,000, which is about average for us. I've made 100% of my on-time payments, and I've had my good old faithful Wells Fargo credit card for over 17 years. And as of right now, when this was pulled, which is key because your billing statement will impact your score because that is what's sent to FICO to build your score overall, my credit utilization is about 5%. Side note, I did pull my credit score within my Wells Fargo app, and it was a bit different, landing about 841 versus 819 within Capital One. Both are still great and in that same range, but variations across credit bureaus are common. Overall, I'm proud of the score I have now, but I wish I had focused on this number a little bit earlier in my life. Now, I wanted to go from good to excellent credit. My credit score was stuck at about that 730, 740 for years. I was in a good place, but could have been in a better place. I didn't know how to fix it until I learned about the FICO breakdown. I wasn't focused on my credit score until we decided to buy our first property together. Now, I had bought and sold property before then, but I knew it would be different as a pair. This would be our primary home, our home for at least the next 5 years, so our interest rate needed to be stellar. I know some people will be like, what's the point of getting a credit score over 740? I honestly thought the same thing until I found out each lender defines good and excellent different, and that impacts your interest rates. And a few basis point changes in an interest rate for a long-term investment like a home means thousands. I cannot stress that enough, so Operation Excellent Credit was in motion. But my husband, he had the opposite problem for me. He had limited to no credit. He lived on debit cards for years, and he needed to build up his credit history. We both spent time working on what we needed to do to get our credit in check fast. Here are the 3 steps I took to get my score over 800. The first thing I focused on was getting or improving my credit utilization. As this represents 30% of my score, I knew this was a quick and highly effective thing to do to get my score higher. It was really simple. I called my 2 banks, Wells and Capital One, and asked to increase my credit limit on all of my credit cards. The process was simple at both banks, as you can imagine. This is a bank's dream. They love giving you more credit because they assume you'll spend more and the credit card cycle will never end. But there is still an approval process to get an additional credit added to your credit cards. Fortunate for me, excessive spending on an increased credit limit was not a temptation. Now, if you struggle with paying down your existing credit card, I would highly advise this not to be your first step to improve your credit score. I'm by no means a credit analyst, but it can lead to more debt long term. But this was not an issue for me. To put things into simple context, imagine if I had a rolling balance of $2,000 and an available credit of about $25,000 across my 3 credit cards. When I increased my credit limit to what I was approved to, each bank's card had different approval numbers. But in total, let's say it moved to about $42,500. My credit utilization went from 8% to 5%, which is more appealing to lenders, and that shift was quick. This simple change showed lenders that I'm able to manage more of their credit effectively and helped push my score up quickly. The second thing I did was pay my balance weekly. Now you're probably wondering why weekly. At the time, my husband and I were both being paid on the 15th and the last day of the month. Doesn't sound so bad, right? It wasn't, but our credit card billing cycle was on the 25th. So we would pay down our credit cards at the end of the month, but that was after the billing cycle. The billing cycle is what is reported to the credit agencies. Now, I had no idea this was how it worked. Shame on me. This sounds obvious, but it wasn't to me. Because we charge a lot of our expenses on our credit card, our balances were always high around that $2,000 mark by the billing cycle date. I mean, we paid it off by the end of the month, as in the 30th or the 31st, and never incurred fees, but we didn't hit the key billing date on our statement. I should have paid more attention to our statements over time. So the goal now was to pay down the balance as much as possible by the billing cycle versus the end of the month. It was not an easy shift for us because most of our expenses were front-loaded in the month, but to help us get to a lower balance by the billing date, I started to send payments weekly on Sundays versus a lump sum at the end of the month. This slight change helped me improve my score really fast. Okay, the last thing I did was check and dispute an error on my credit report. Now, I have pulled my full credit report, but because both my banks provided my credit score, I hadn't pulled my full credit report in years, but I'm glad I did. Back in 2013, I sublet my apartment lease to a nice older lady. I had to break my lease to move closer to a new job, and I was happy I found someone who can help me bypass that lease problem. Well, everything was approved, and I believe the transaction was smooth. But little did I know that my name was still on the lease when she renewed it. Unfortunately, during that time, she struggled to pay her rent, and her account was put into collections with the property management company. I had no idea this occurred until I pulled my full credit report and saw the incident. I panicked at first, then I got annoyed and angry, but then I realized it was a small human clerical error. So I spent time outlining the discrepancies, contacted the property management company to provide clear documentation on the incident, and then I called the credit reporting company to get things cleared up. The hardest part was contacting the property management company, as it was almost 8 years ago, and as you can imagine, people I had worked with have since moved on. And so I now preach to all my friends and family to use that one free credit report pool every single year. Now, I wasn't scammed, it was a clerical error, but it could happen to anyone. Now, the key is to establish strong financial habits first. I was able to make these changes comfortably because I had established and created a strong money management system with my husband. I was budgeting, paying off debt, investing, and I was building wealth. We were in the thick of our FIRE journey when I made these final changes. Because I had already had strong financial habits, it was easy to make these 3 adjustments. Now, if I was earlier in my money journey, then I probably wouldn't be so effective managing the impacts of these changes. For example, the younger me would probably have increased my spending if my credit limit also increased. I probably would have paid just a minimum each month versus paying down my credit card based on the billing cycle, and I definitely would not be checking my credit report fully annually at all. I had to first establish my financial mindset and build a new behavior around money to help me achieve a higher credit score. To be clear, steps 2 and 3 are something I advise my younger self or anyone starting their financial journey to do right away. But increasing your credit limit, I have no idea if $42,000 is a lot of credit or not, but let me know in the comments how they compare to your limits. But always evaluate your personal financial journey before taking any step. Keep in mind, what works for me may not work for you. Overall, I'm happy with where I am today. The goal is to stay above 800 unless I get into the travel credit card hacking game, which has been on my radar, but right now I'm happy with where we are. Now, if you made it this far, thank you so much for watching. But don't forget to like, comment, and subscribe below. Until next time.